I thought the same.
Welcome back to Business Emma. My name is Simba Elijah Charles Kiage. Sorry for that technical hitch there with our sound this morning. We're still talking with one of our analysts this morning. You do know him, Odhiambo Ramogi. We do have conversations before we go on air. That's why we had that one right there. All right. Now, this morning, we are going to look at the biggest economic headlines that you're waking up to. As usual, let's begin on that now. Jamii Bora Bank has been renamed Kingdom Bank. Now, the name change comes barely weeks after the Cooperative Bank of Kenya took control of 90% of Jamii Bora Bank's shareholding. In a statement, Coop Bank has also constituted a new board of directors for Kingdom Bank that will be chaired by Margaret Karangatha. Now, the member include MacLeod Malonza, Julius Sintanay, Coop Bank Group CEO Dr. Gideon Muriuki, and Anthony Mburu, who is the new Managing Director and CEO of Kingdom Bank. Now, before his appointment, Mburu was the Director in charge of credit management at Coop Bank. Now, Coop Bank's acquisition of Jamii Bora Bank is set to ratify in the next annual general of Coop Bank shareholders, having already been approved by the Central Bank of Kenya and the Competition Authority of Kenya. Let's have a look at the strengths of Coop Bank this morning in terms of exactly how their performance has been. And we're looking at the key performance indicators. And if you look at interest income also, and net income before tax, and net income as well, you will see that all the way from 2017 to 2019, which is the latest or recent data that we have on that front, you see how Coop Bank has been improving on all those fronts, which pretty much tells you that they have the strength and also the reason, therefore, to keep on acquiring more banks in the economy, which therefore begs the question, another acquisition this year, right? Question being, what do you predict will be the fate of the smaller banks in the midst of the COVID-19 pandemic that has taken Kenya a toll on even the big financial institutions? That begs us to ask, should we brace ourselves for more mergers and acquisitions in this space? And to help us, therefore, understand exactly what is happening on this area, we are joined by Tommy Rendell. He is a policy analyst. And Tommy, do we expect more acquisitions and mergers in this space?
I think it's very possible under the current financial situations. Some of these negotiations take place in secret before we get financial statements allowing us to know whether banks are doing well or not. So it's very possible for these big tier banks to absorb some of the smaller tier banks, since most of them are making a lot of profit, even though they've declined compared to their previous half year. Like Corporate Bank profit was down 7%, but it was still a lot. They had a net profit of 7.2 billion, so they have plenty in their watches, similar to KCB and the other big tier banks.
All right, now, Tommy, the other question around this area is that upon the acquisition of a 90% stake of Jamii Bora Bank, Coop Bank opted to let the whole board of Jamii Bora Bank and bring on board its own. Was this a strategic move, and what would you say informed this decision?
If you own 90% of an institution, you want total control of it. And what led Jamii to this was probably the prior management. So it is better to clean house and start from scratch with people who you know, who have a proven track record, which they do. For instance, Anthony Mburu, the CEO for the new Jamii Bora Bank, has got an excellent track record and a prior history with Coop Bank. So it's better to have him there and be sure that things are being steered the way you want them to be steered.
Pretty much, Tommy, just before we pretty much look at other issues around this area, paint to me the picture of what smaller banks now find themselves amid the COVID-19 pandemic. Do you really hope and think that under the current environment risk of COVID-19 pandemic that they're going to come out strong?
No, I don't think so. The financial crisis that has been brought on from March because of this pandemic has severely affected people's ability to repay their loans. The government has tried to help by easing the tax burden on consumers to allow people to spend more, but still it's too early to know what the future is going to bring based on this pandemic.
Pretty much. Now, Ramogi, I just want to get back to you on that. We do know where the CBK governor, Dr. Patrick Njoroge, really wants to push the financial services sector. He's saying that, well, it looks like a man who celebrates acquisition and mergers every time that they happen in the Kenyan economy. Do you expect for us to see more in this space, even before we close the year?
First of all, he's not the only one celebrating. I'm delighted by the merger between Jamii Bora and Co-op Bank. I actually know a good chunk of the board at the now Kingdom Bank, so I'm a happy Kenyan. What it shows is there will be economies of scale that both companies will enjoy out of this merger. One of the problems that we have in the country is we are overbanked. There are too many banks, and there are tiny many banks. What that results in there's a lot of the cost of doing business is high. And so the central bank is interested in mergers and acquisitions because that will ensure that the cost of doing business goes down as these banks enjoy economies of scale. And everybody will benefit from that. It will mean profitability, it means revenue for government, it will mean better rates for the rest of us who are borrowing. It would mean a better financial market, easier to regulate. What we now have is interesting because you have the fast tie-up going all the way down, and then you have the MFIs, and then now we have a new mammoth called the fintechs that are also garnering a lot of money out of this market. So it becomes tricky. The lesser banks we have, and they are strong, they are big, it becomes easier for them, even now to, so to speak, take over the fintech business. Because soon and very soon, after they start struggling and the rest of us are not able to pay all the money we are borrowing from them, they will need the big banks to buy them. And that will happen very soon.
Pretty much. Now, Mr. Gabriel Mahome, let me just weigh you in on this as well. Do you think that, yes, we have been seeing a couple of mergers and acquisitions that has been the trend in the banking industry? Is it going to go on, and is it going to be accelerated by the effects of the COVID-19 pandemic?
Just like my fellow panelists have said this morning, COVID-19 has had a lot of impact in the market. We've seen different sectors of the economy getting very adversely affected, and that affects the banking institutions. And I think from where we're going, we need consolidation. We need stronger institutions so that we can actually be able to enjoy the economies of scale. And also we can actually now have competition moving from the smaller things that cost people a lot of money to more innovation that makes it easier to deliver to more customers. Yes, we have many banks, but I think we still have many people who are not consumers of the banking services. And we've seen this in other regions. I think we've seen this in Nigeria. They brought in their 70 plus banks into 5 strong banks. And what has happened subsequently? They've gotten bigger, they've gotten stronger, they've gone out even into other territories and other countries. And we have felt that they've come to this place. So it is a good thing, and it's going to happen as we go ahead.
All right, gentlemen, I just beg to we move to the next issue this morning, when CBK is warning of reemergence of fraudulent schemes. All right, now CBK is warning of reemergence of fraudulent and unlicensed financial schemes seeking to take advantage of Kenyans during the COVID-19 pandemic. In a statement, the CBK has warned that rogue entities that include online payment schemes, unlicensed credit and savings schemes, and unlicensed online forex brokers and traders have styled themselves as online global networking companies that seek to recruit members of the public to join and make cash deposits, purportedly to buy shares in the company. Now, the entities also promise customers huge returns and are not licensed as required. Now, the central bank, together with other financial regulators, is now urging the public against dealing with unlicensed financial schemes and dealing with unlicensed online forex dealers to protect themselves from being defrauded and losing their money. Now, we keep seeing an influx of these fraudulent schemes, particularly in the online space. What do the CBK, therefore, and other financial regulators need to do on a regulatory front to get on top of what is proving to be a recurring problem? All right, let me just pick Tommy on that.
This is common now with COVID going on, and I've seen a lot of it take place, like on Facebook, where you have micro lenders that are not regulated, forex trading online, where everybody is urging you to trade for yourself with a small deposit and add more money, and they are not regulated. So I think it's important for them to be regulated, because what happens is when you start to lose your money, no one picks up the phone on the other side, no one responds to email. So regulation will kind of cut down on this and prevent people in desperate situation from being taken advantage of.
All right. Now, Tommy, just before I let you go on that as well, do you think enough has been done in terms of regulating these entities that operate in the economy?
Yes, I don't think enough has been done, but it's kind of hard, especially with the online space, because people can run an online business here from somewhere else in another country. But I would say that the central bank is making an effort. And also it comes down to a lot of consumer knowing and understanding the practices and the safety guards that regulation avails to the consumer.
All right, Mr. Bome, Tommy says that he thinks that the Central Bank of Kenya is making an effort. But what we've seen so far is the Central Bank of Kenya warning us that you should not be moving to that direction. Do we expect more from them and any other regulator?
And I think the president was clear yesterday in his speech about us taking things in our hands. I think he called it civic responsibility. Central bank can only do so much, but at individual level. And we are all the time involved in financial literacy, and it's actually a big challenge in this country. I did hear the president say yesterday that because of all the measures that have been taken, the VAT refunds, is about 47.8 billion in the hands of Kenyans. And this excites a lot of people. And we're in a situation where, yes, people might have this money, but sometimes they do not know where to go with the money. And when that happens, there's a lot of people who cause excitement. And in this country, there's been good research that shows we want to get rich and we don't care how. And that is how sometimes we find ourselves in very deep holes. And there's a big possibility. The other thing we need to look at, a lot of people have now gone to work online. Organizations are getting workers to work off-site, and they have been enabled. So we are on the net. In January, we had around 9 million Kenyans who are on social platforms in a given time. That number has gone much higher. And this is why now there are more people who are susceptible, because if you're looking for them, you know where they are. And if they don't understand it and they want to get rich quickly, they'll be tempted. And yes, we're likely to see problems in that area.
Pretty much. Odhiambo Ramogi, I want to get your 2 cents of that. Well, are you satisfied with the regulation that is going on in this online space? Because what I pretty much feel is that this is a warning. Do we leave it to the masses to know what is good and not, or do we leave it to the regulators to come in and clamp down on these rogue operators?
Well, offline, I hold the opinion that we are overregulated. I mean, the other day, I just realized that CMA now wants to regulate even private equity. Come on. I think they are overreaching. There's a lot that can be done within the public space, but when you go into private equity, you're probably going too much. I think for the Central Bank of Kenya, the main challenge for them is these fintechs that are lending money to even subprime borrowers. That would look bad on us as a country. That would just make sure that people are borrowing money and they are being listed at CRB unnecessarily. We are over-regulated. I mean, if for instance, we can take university graduates to CRB merely because they have not paid help and because they have not gotten jobs. We are regulated. The issue has never been whether the laws in place are sufficient. The issue has always been implementation, enforcement. And the reason that enforcement is always a big problem is because a majority of the guys that are proposing or advancing some of these schemes work for the government, and they have interests in government. The government officers that are supposed to enforce are they actually the culprits. But now when you come to the online space, that is a whole space altogether. And the reason being, the online space has no borders, has no boundaries. Anything can happen anywhere. For example, Forex is a 24-hour economy that goes on for like 7 days. Because when it starts in Japan, by the time Japan is closing, perhaps Spain has opened and etc. So it's a 24-hour economy. You cannot tell a Kenyan based somewhere in Kilimani, Nairobi, not to do business with an Indian somewhere in New Delhi. It's very difficult. And so the challenge is not necessarily regulation. The challenge is public awareness. The challenge is education in terms of the financial literacy items. There is financial literacy going on, but it has always focused on savings. It has always focused on get income, diversify your income, perhaps tax planning. It has never been about Forex. It has not been about investments. And I think we need to move into that space so that that financial education meets the needs of the day. And the needs of the day are online and investment and Forex and fintech.
All right, Wahome, I just want to pick you up on that because Odhiambo Ramogi says that most of the financial literacy programs that we have around are pretty much about how you can make money, how you can save that money. Do you think that now it puts you on the spot on the exact programs that you're also running under financial literacy?
I think that's a good place Ramogi is talking about. But let's appreciate that in the first place, there's no structured financial literacy in this country. It's not in the school curriculum. It's not in the college. When your employer gives you your first paycheck, he never gives you a user's manual. You are left to the winds and the sons of heaven. It's up to you. But again, we have to be proactive as individuals. And the question of what do you want to learn? Because it's all available. If you wanted to learn about Forex, and there's actually a lot of potential about Forex, there are many open channels you can learn. There are institutions here, there are institutions online that can be able to teach you. So it is behoved on the investor as they are calculating their risk. They have to look for mechanisms of controlling their risk by understanding the risk they are getting into. So I think that's very key. That cannot be taken away from the people. The other thing we've seen, a lot of people do not even want to engage in financial literacy programs. And so only when they lose money do they actually realize that if they had actually taken time and invested, they would actually have found a better way. So it is not all about savings. It's also understanding the new environment. You know, if you hear about derivatives, you want to understand what it is, how does it work. If you hear about REITs, you can actually, from your sitting room, like Ramogi said, trade on the New York Stock Exchange, and that's not a crime. And so the space is that wide that actually there's nobody who can actually create any curriculum to cover everything. But if you're looking for knowledge and information in any area, it is readily available. In fact, the net, YouTube, it's all there. So it's a question of, are we looking for it or are we hoping somebody else will? Now, people always say when they're in trouble, Serikali's idea. There's something that's very certain. Serikali cannot work against dynamics of the economy. Where the risk is high, where the possibility of return is high, the risk is always high. And there's nothing government can do about that. So when you enter a pyramid, and you willingly went into a pyramid, be prepared to lose or to gain. I think that's the reality we need to understand.
Pretty much. All right, gentlemen, let's move on to the last issue that we have for you this morning. It now appears that KRA's plan to go after tax cheats in the financial year 2020-2021 is bearing fruits after KRA announced that it was already nabbed 259 rich tax cheats in the country. Now, in a story carried in a local daily, Commissioner General Gideon Mburu did not disclose the names but reiterated that the agency is propping the tax evaders. Further, some of the punishments that the agency has outlined include travel bans, collection of a duty directly from their suppliers, and bangers and prosecution. In what now looks as the biggest crackdown yet on high net worth persons, the taxman is now rushing against time to bring more people into the tax bracket and curb tax cheating and evasion in the quest to meet targets in an economy where the COVID-19 pandemic has battered collections. Now, the tax commissioner says that the agency has profiled 1,309 individuals and companies with a tax loss estimated at approximately 259 billion. First question, are tax cheats the biggest threat to KRA meeting their targets in the current financial year? Tommy, I want you to weigh in on that.
I don't think they're the biggest threat. I think if they are cheating now, they were cheating in the past. So it wouldn't really make a difference. And the article mentioned people on Luthuli. So if they're doing it on Luthuli, what about the huge numbers in other places? So the pandemic really is the biggest hindrance. Also because the curfew is impacting business happening at a certain time. So like bus travel, things like that. So that affects the economy, but not necessarily, and the revenue that comes with it as well. So like I said, I'll say if they were cheating now, they were cheating in the past. I understand the KRA's pressure to meet the tax revenues, the tax targets that they have in mind that they should have.
All right, now Odambora Mogi, let me just also get you in on that. Tommy says, no, it's not the biggest threat. But KRA is telling you we're going to get 259 billion shillings from these 1,309 guys. It looks as if they have identified them meeting targets is pretty much going for this 1,309 people.
So, the truth is, first of all, I'm happy they are going to get an extra 259 billion because at least that, I hope that will not go into some people's pockets and it will actually go into providing services. But the truth of the matter is tax evasion in Africa is a big problem. And it's not just individuals, it's actually corporates as well. Multinational corporates that actually evade taxes creatively and innovatively through subsidiaries, through the use of tax havens. But you see, right now the government is struggling for money. They're cash strapped, and so they are going to look for anybody they can get money from. The challenge with that is the people they are calling high net worth would probably be the small fish. The big fish who import things at the port of Mombasa with no customs duty whatsoever will probably not be touched because, hey, they are the big fish. And so that to me is a challenge. The other challenge also is that corporates will not be targeted because there are a lot of corporates that are not paying taxes. Look, and the bigger problem also is the smaller businessmen who probably don't want to know anything to do with VAT and actually within the VAT bracket. Look, what KRA collects in a year will people. That's how bad tax evasion is in this country. And so if they can go in that direction and actually pursue and enforce and ensure that tax evasion is avoided, that everyone who's supposed to pay taxes actually pay taxes, then we'll probably go to a very good place because our revenues will triple significantly.
Pretty much. Now, Wahome, let me just bring you on this as well. Now, we do know KRA asked for 1 billion shillings in the current financial year to employ 1,000 more people. We're supposed to go for all these numbers we're getting this morning. Which would have been a better option? Use this 1 billion shillings, push it to expand the tax bracket to the informal sector of the economy, or utilize it the way they are doing it right now?
I think just like we said, this is actually a serious problem about tax and tax collection. Sometimes we got the egg chicken position. Yes, we pay taxes, but people actually find a way of putting it in their pockets and they dissuade us from doing that. But there are enough people who are not doing the right things. Then sometimes it is systematic. There are system issues that even tax that's collectible is not being collected. And so, yes, maybe you need more staff, but I think you need more technology, you need more systems, and we need to integrate systems in this country. You know, you own a premises, you pay rates, you have power, you have everything, but you don't pay taxes for all you collect on that premises. You actually importing and you bring in stuff from the port and you're not paying taxes. Our systems sometimes are not talking to each other. And I'm hoping that by getting maybe more hands, they will actually be able to put in more systems and they can be able to collect more taxes. If we collected all the taxes and we used it well, people will even be incentivized not to do tax evasion, but maybe to try the mechanism of tax avoidance that has been provided. And in our literacy programs at the Personal Finance Academy, we help to know how to reduce personal taxes, but not to evade it, to avoid it, because there are structures of doing that. And maybe that's the incentive people will be getting, so that this you can actually be able to pay tax that is payable, but then where there is reprieve, you get your reprieve. It's a whole systematic issue. I do not think it would say putting this money elsewhere would been okay. But we need to get everybody to pay their share. And sometimes there's an argument that the informal sector should not pay. But the informal sector is very big. And there are people running millions of enterprises, and they still call it the informal sector. So everybody has a share. We have a problem that we get the workers, people on payroll, and we squeeze their necks out of everything. And really, just because they are easy to get should not be the reason why we squeeze their neck out of everything. We should try and get more people in the tax bracket so that then we are able to collect more. I think if more people are paying, the taxes would even be a bit lower and maybe people would enjoy their money.
Pretty much. Now, Tommy, just to do the last one in on this subject, they asked for 1 billion shillings in the current financial year just to employ 1,000 more who are supposed to actually come in and net these high net worth individuals who are not paying their tax, which would have been a better option. Use this to expand your tax bracket to the informal sector, which is the problem as to why we are not meeting our tax targets, or use it the way they're using it right now.
First of all, they need to clean house. There's a lot of corruption within the KRA. We saw a purge that went on a couple of months back, a couple of weeks back, which is a good step in the right direction. But yeah, the way they're using it is just fine. If they need to get more staff so they can get more done, along with what Mr. Ohomengari and Odhiambo Ramogi have mentioned about integrating systems, that's very important. So I would say keep doing the three-prong approach. Use the money the way they are by hiring more staff, integrating systems, and cleaning house. Get rid of the bad apples within KRA.
Pretty much. All right, gentlemen, I want us to move into the next, that's the last area that we want to talk about this morning, which is talking about the cost of bank loans, which is now at the historic low. Now, data by the Central Bank of Kenya now shows that banks are being forced to reassess high-risk quarters in the economy. Now, the data shows that lending rates have fallen by 11.89% in June as a result of a consistent drop in the banking regulator's benchmark lending rate, making it the lowest since, now wait for it, 1991. Now, this has consequently reaffirmed the optimism expressed in some quarters of the economy over the country never experiencing expensive credit again after the removal of the cap on interest rates. Now, the data also points to a grim picture of how the private sector credit from banks only expanded by 7.61 to 2.69 trillion, well below the recommended 12 to 15%. Now, Odhiambo Ramogi, is it the effect of this affordable cost on credit being felt in the economy, or, as usual, is it just on paper and the situation on the ground is different?
No, I think, first of all, I like the low interest rate regime because it means, therefore, that one, the small business owner can access financing from banks. Two, it also means that money can circulate in the economy faster, creating a multiplier effect, driving growth upwards. This is perhaps the only way we will be able to survive COVID-19 if this actually gets to be implemented on a big way. The challenge, however, are the business owners borrowing because fair enough, there is available money and it's cheap money. But do I have a business that is actually generating income that can actually sustain a new commitment of this caliber? And so that is something that we'll need to observe over a period of time, perhaps give it 3 months, then we'll be able to know whether the response on the ground is good or it's not good. But if you ask me, I think it's a very good regime. It's a good place to be. And if I had any need for money, I would borrow right now.
Pretty much. Mr. Wahome, let me bring you in on this as well. Just 30 seconds. Should we expect the situation of the cheap credit now that is available from the financial services sector, and I would say the banking industry, to stay, or do we expect these rates to skyrocket again once things normalize?
I think there's just one risk. The government seems to have huge appetite to borrow. And everything the government does, they want to borrow. And as long as government is doing all the borrowing, they are going to crowd out all the other borrowers, and the interest rates are likely to go up. If the government restructures and the appetite for debt doesn't go that high, then I think we can have the rates sustainable for some time.
Pretty much. Tommy Wendell, just kill this conversation from us this morning. Yes, we do have those news that, well, the private sector credit growth has been on a decline. I mean, 7% when it's supposed to be at 12 to 15%. What do you think is the impact going to be on this cheap credit, if any, in the economy?
I think as long as we have uncertainty, this brought on by this pandemic, as much as you can borrow without being able to know whether you will be able to generate income to pay it back, it'll remain low. So like my fellow panelists said, in the next 3 to 4 months, once we know the way forward, curfews, whether businesses are reopening, movement within the country, those factors will be once they can be taken into consideration, then people can know whether it's worth using the money. And like he said, the multiplier effect of borrowing it would be nice, as long as you can use the money to do what needs to be done and be able to repay it.
Pretty much. Thank you very much. This morning, we were speaking to Odhiambo Ramogi, the CEO, Elima Capital, Wahome Ngare, who's a financial literacy coach, and Tommy Wendell, who is a policy analyst. Those gentlemen have been with us for a couple of minutes as they tell you exactly what it is that you're waking up to today in terms of your biggest economic headlines as you start your business day. We take a short break here on Business AM. Once we come back, let's talk matters. Safaricom, shall we?